Hey guys, hope everybody's doing okay. Today I got a good one for you. It's I'm kind of addressing a comment down in the comment boxes down below. Somebody asked me a question of what kind of portfolio I would put together if I was looking for about a 4 to 5% dividend yield and some really strong dividend growth. And I'm going to share that with you today. And I'm going to do this in M1 Finance. And if any of you are unfamiliar with M1 Finance, I got a special for you today. I think this month or maybe through February, they are offering a promotion. If you are new to M1 Finance and you deposit $100 in a regular brokerage account while using my link that I have below, you will get an additional $30 on top of the 100 you deposited. An instant 30% return on your money. I don't know about you, but a 30% return on your money, that's good. Really good. Now, if you're going to open an IRA, they do require a $500 deposit for you to get the $30. So the return on that is not as good, but I don't know why they do that, but still, it's a free $30. So use my link to M1 Finance down below. You deposit 100 or 500 in an IRA, you get $30, I get $30, win-win situation. So if you're new here, like, share, subscribe, do all that good stuff. Use all those promotional links down below, and let's get to this video. So right here, we are in my M1 Finance RV Fundo-Matic 2000. And that's this GW ETF channel RV fund. If you're not familiar with that, I put all the money from the affiliates, YouTube income, all that goes into this fund to buy me and my wife an RV when we retire, hopefully sooner rather than later. So that $30 that you'll get and the $30 that I'll get, the $30 I'll get will go directly into this fund to fund that purchase. So if you're unfamiliar with M1 Finance, to me, it's a great platform for ETF investors, because you just set up your pie, your income, your ETF pie, and you tell it, see, this is the pie. You set it up and you tell it how much you want to invest in each, what percentage you want to invest in each ETF. And once you have that set up, you just throw money at it and you essentially forget about it, is really the best way to do it. Set up your ETF pie, fund it, put it on autopilot, and just let it run. M1 Finance will dynamically rebalance it and keep it within those parameters or close to those parameters that you set throughout the year as you deposit money. So really a great platform for ETF investors, long-term ETF investors. So we'll go and look at research. We'll go to My Pies. Sorry guys, I'm getting over that virus that we had, and I'm getting a little excited here, and I'm feeling out of breath. So let me calm down. So we'll go to My Pies, and we'll go to the 5% yield dividend growth pie. And what you'll find is I have 4 holdings in this pie. It has a current dividend yield of 5.093% with an expense ratio of 0.44. Yeah, expense ratio is a little high, but you're getting a 5% dividend yield, and you're getting, I'm going to throw a guess out there, about a 10% 10-year average dividend growth rate. So if you're not familiar with dividend growth, I got a video that I did where we compared high yield, low growth, lower yield, high growth, and it was really interesting, the results of that, and I'll link that down below. But what we have here is 4 holdings. It consists of 4 ETFs, and all 4 of these ETFs I've done videos on, and of course I'll link those down below as well. But it consists of the number 1 is FDL, and that's the First Trust Morningstar Dividend Leaders Index Fund, and I put 25% of the fund into that. And what that gives you is about it's running about $30 a share right now. Has a 10-year growth rate of 8.66%. We'll look quickly at the holdings, the breakdown, and there's going to be financials, communication, healthcare, utilities, and consumer defensive and technology, both with double-digit weightings in this ETF. It really is lightweight on industrials, basic materials, consumer cyclicals, and energy. Top 10 holdings: AT&T and Verizon. You know, a lot of big names here: AbbVie, Pfizer, Philip Morris, Altria, IBM, Broadcom, Citigroup, and Dominion Energy. Has about 96 holdings. Top 10 is about 60% of the fund, which is quite a bit. But more detailed information in the video. Next one, QYLD. You know, QYLD had to have a place here. This has about an 11 to 12% dividend yield. I don't know about the growth. Seeking Alpha, don't trust Seeking Alpha with QYLD, especially because they have it wrong, like totally wrong. I don't know how they jacked this one up, but they did. But I'm going to say there's going to be some small dividend growth out of QYLD, but not very much. But you're going to get that 11 to 12% yield, and that's, you know, give you a pretty good bump to achieve that 5% annual yield. Next one is called Regal. I did a video on that as well. And that's the mid cap, so we're going to get some mid cap exposure here. Dividend Aristocrats ETF, and I believe the criteria for the mid cap Dividend Aristocrats is 20 years of dividend increases. So this one only been around for about not so long, maybe 5 years, 6 years or so. So it doesn't have a, I think this is wrong again, but I'm going to just say about a 10% growth rate, even though it says 19 and 28 here. Look quickly at the holdings. There's going to be a lot of financials in here. Industrials, utilities, consumer defensive, consumer cyclical. We'll look at the top 10, and a lot of these you're not going to know. I'm not going to know either. A lot of these are kind of iffy. Not iffy, sorry. I shouldn't have said that. But just not ones that are off the top of your head, because you don't hear about them because they're mid-cap companies. John Wiley and Sons. I have no idea what they do. Mercury General, I think that's insurance. Bank of OZK, that's a little regional bank. United Bank Shares, another bank. MSC Industrial, I believe that's an industrial parts company. Regal Belois, I don't know what Regal Belois does, but apparently they've been paying dividends for 20 plus years. Cullen and Frost Bankers is another bank, I would imagine. New Jersey Resources, that sounds energy to me, but I don't know what they are. Ryder Systems are rental trucks. They do semi-trucks as well. Basically a truck rental company, moving company as well. Healthcare Services Group, my guess, some insurance, some sort, maybe. Who knows? But there's 51 holdings in this. I believe they're pretty much equally weighted, and all of them do have paid their dividends or grown their dividends for at least 20 years. And that's the Mid-Cap 400, ticker symbol REGL. And that is the third one. Now, the main one that I like in here is SCHD. And the SCHD, you know, has a dividend growth, has a 5-year growth rate of 12%. I'm going to call the 10% growth rate around 10%. We'll just, you know, we'll just guesstimate it there. And, you know, this this pie is definitely heavy financials. Okay, but over here we got financials, industrials, which we were light on the other three ETFs. Consumer defensive at 16, technology at 12, consumer cyclical at 8. We'll have a little bit of energy exposure. So, and top 10 holdings are not available. Great. Well, I'll show you the two real quick. In the top two, Coke and Pepsi. So they're going to be consumer defensive right there. If those are the top two, it has about 100 holdings in it. I'd have a video on that. I think I might have to do an update. I'm not sure. I'll have to do some update videos on some of those ETFs that have rebalanced here in the future. But those four make up 1/4 of this pie that will get you a 5% dividend yield, annual dividend yield, at a fairly expensive expense ratio. But at the expense of 45% return over 5 years and a 5% annual dividend yield, I think that's okay. So that's it. That's my choice for a ETF pie that would generate you 5%, get you some dividend growth, all in a platform within M1 Finance that you can set it and forget it, fund it, put it on autopilot, and let it ride. They say that the best investors are the ones that forgot about the accounts that they had, because they just let it go and never looked at it and never messed with it. That's the strength of M1 Finance. You can set it up on autopilot, let it just, automatically transfer money from your bank into your account. It'll purchase everything in your pie according to how you set it up, and you can just let it run and live your life. Awesome platform for that. So, hope you guys enjoyed. If you got any comments, questions down below, please leave them. What am I saying? I'm trying to go too fast. If you have any comments or questions, please leave them down below. I usually respond to every single comment out there. I appreciate all of you guys. Use the links. You get $30 back from M1 Finance if you haven't opened a account with them before and you use my link. You get $30. I get $30. You get to fund the RV Fundometer, and it's a win-win. So thank you guys. I appreciate it. You guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.